Okay, so I'm back with a mortgage review, and this one is specifically for folks that are downsizing. So whether you're in retirement or getting close to retirement and you're just looking to simplify your life, then this listing is amazing. I'm a little biased because my mother-in-law lives over there, so I know a lot about it. So this one is 810 Golf Links Road. It's Unit 32 in Ancaster. It is absolutely beautifully maintained. It's a bungalow townhome in a quiet community. Again, perfect for downsizers. And I can tell you from my personal experience and what my mother-in-law says, she absolutely raves about it. So she talks about how well the property is maintained, how friendly the neighbors are, and how everything outside, your snow, lawn care, you name it, is all taken care of. And that's the peace of mind for her. So I'm not going to get too much into the property. You can look it up as you can see on the images. Beautiful, beautiful property. I want to take you through the numbers. So the first thing I'm going to do is I'm going to take you through how to purchase it, but then I want to talk specifically about two products that are perfect for people that might be going into retirement. Okay, so what's the purchase price? Well, it's a reasonable $869,900, and we're assuming that you're going to be selling your property and downsizing in there. So you're going to put 60% down. That's $521,940. So your mortgage amount is going to be $347,960. So your estimated monthly payment's going to be under $2K, so $1,866.36, and that's based on a 25-year amortization. The property tax for this property is $5,513, and then you have condo fees for $530. So that brings your total monthly housing costs to something that's very manageable, especially if you sold a larger home and unlocked some of the equity. But the key here, okay, the key is how you structure your mortgage. It really does matter, and the product you choose going into retirement is extremely important. So I want to walk you through those two mortgage products I talked about, and I often recommend these to people that are going to downsize or they're going into retirement because they do offer a lot of flexibility and control and give you access to your equity without ever having to lock into any rigid structure. So my favorite product is the Scotia Step. So this is a great product. This is a re-advanceable mortgage product, which means as you're paying down your mortgage, more of that equity becomes available without ever having to reapply. And you can split this mortgage up, and this is why I love it, is you can do 3 different segments. So right now we're in a rate declining environment. I can put part of that mortgage in a variable. I can lock that thing into a 5-year fixed. I can keep a part of it open. And that just provides flexibility. It doesn't mean you have to do all that, but it really does provide some flexibility. So why is it great for retirees? So number one, gives you access to your funds later in life. It certainly helps with estate planning and unexpected expenses. So, even helping out children or grandchildren with down payments for their properties. It's ideal for renovations, travel, or even investing. A lot of people use this product to invest as well. And makes your home equity very liquid and still gives you a lot of control. The second product I want to talk about is very unique. You want to get this before you go into retirement, and that is the Manulife One. Now, it's a very unique product because it's a combination of a mortgage, a line of credit, and a bank account all in one. So think about it. As your income is coming in, like your pension, CPP, investments, your employment income, all of that is going to flow into the account, and it instantly hits principal and pays down principal, which means you're going to be paying off your mortgage faster, but you're also be paying a lot less interest. And that's because interest is calculated daily with this account. You can always borrow back your equity at any time. There's no paperwork, no delays. So for retirees, this is a game changer, and I'll explain why. So as you're heading into retirement, you might run into situations where you need access to cash. So these are things like medical expenses, helping your family out. You have big one-time purchases like maybe a car or home repair, or simply just want the peace of mind of having a financial cushion just in case you outlive your retirement income. And that's where reverse mortgages come in. However, reverse mortgages are pretty expensive. And so a lot of people, when they start thinking about reverse mortgages, they start thinking about, I'm going to lose a lot of equity in the house. It's really expensive to set up. But if you take this Manulife One into retirement, it acts like a reverse mortgage. And what I mean by that is if you borrow money off your main account, your main account can pay itself back from the home equity line of credit. So that you can do that right up until you max out the room in your line of credit. So basically, you wouldn't actually have to make a payment yourself from your income coming in. You can do that and capitalize that from the actual home equity line of credit. So that's where it kind of acts more like a reverse mortgage. So again, it's a pretty good product when you're thinking about going into retirement. So the bottom line here, if you are downsizing into a home like this one, you've got lots of options that you can make for your retirement and ensure that it's more comfortable for you, more flexible, and you're more financially secure. So again, I'm Dwayne Cavan. I'm a mortgage agent here in Ontario. And if you have any questions about mortgages, please reach out. I'd love to chat with you. Bye for now.